Following the notion that any pullbacks for the rest of 2023 should be only small, we're looking at the trading opportunities with Gary Glover from his weekly report. Good morning, Gary. How are you?
Yeah, I'm excellent, Chris. How you going?
I'm well. I'm excited to look. There's a fair few individual trades in this week's report. But I guess our first port of call is really understanding where the major indices are as a whole and where you think they're going. And that gives us sort of a full market overview to really understand the price pressures and biases happening on that level before we jump into the stocks. If I'm remembering 2 weeks ago, you'd mentioned that there was a cup and handle forming in the NASDAQ. That looks to be playing out fairly well. Is there any update to that movement?
No, not too much. Yeah, I think it all looks pretty good there, Chris. It's all. I think it's all in line there. So it's broken. We've broken upside and outside of the of our ceiling here, and we're now sort of in a bullish position there, and yeah, so we haven't accelerated here, but this is a pretty it's a pretty large index there, so it's it's going to take a little bit to sort of move here, and it just hasn't been a market that hasn't been in a hurry here, really across the board here. So getting a few more growth stocks sort of popping here, but yeah, look, at the end of the day, it's sort of constructive behaviour. The corrections are getting shallower and shallower. Series of high lows there. We sort of highlighted in that in the last report there, sort of coming out of these sort of midterm years and coming out of these sort of second and third years. That's sort of usually coming out of deeper lows. We just tend to see small drawdowns. So it's almost like a psychology. If anyone who sort of understands sort of option expiry, where you have a lot of calls and a lot of puts that are sort of expiring around a strike, and you see, as you're coming to expiry day, the stock gets drawn to the strike, and it looks and feels like manipulation, but it's not manipulation. It's actually the mechanics of the market. Mechanics, basically, with so many calls and puts all in those same strikes, it forces, as they sell those options, or it forces the stock to be to be drawn towards those strikes as everyone sort of hedges those options. So there's a good reason why those sort of things occur. They seem odd at the time here, but there's a good reason why these sort of these third years we'd have small drawdowns there, just because we're sort of typically everyone's underweight, everyone's sort of slow to come back in, everyone's sort of scared to jump in, they sort of climb the wall of worry, as it's often referred to, and they get drawn into the market over time here as it sort of slowly climbs here. So I feel the same view. I sort of think there's sort of still hesitation out there, still pretty everyone's still pretty underweight here. It's just sort of ticking high here. The drawdowns are small. We're not seeing any sort of selling, any significant sort of down days here. So I feel it's sort of constructed there. You're missing a little bit of breadth there, Chris. That's probably the one thing we are missing there. But that breadth is sort of normally when you're in the meat of the move, or what analyticians refer to as the third wave, where it's really getting impulsive. So we're not there yet. So there might be a bit more to come here, but I still think it's sort of constructive here. So the key there is just the pullbacks. So we're just seeing shallow, small pullbacks, not seeing any aggressive selling. So overall, that's sort of constructive there, even though it feels like a bit of a slow-moving market here.
Okay, well, the breadth hasn't quite come to the party, and I noticed you would talk about sort of different aspects of the market with the Aussie. But the next one working through your report is looking at the S&P 500, which is just trading under that recent high. So quite often you'll look for this kind of movement in a stock. How do you read it for the S&P 500, where it's sitting now just under that high that we saw back at the start of the year?
Yes, I mean, look, it's we've got our classic October midterm year low. We've sort of got our first high low in March, which is sort of classic cycle stuff here. We've come back and retested the break zone, which is textbook behaviour here. What we just haven't seen is the breadth and the impulsive sort of nature there, but we've come back and we're congesting under the high again, and again we've got this small, that weekly pattern there last week, because it's so tiny. So very little, so when you see that sort of tight price action sitting under the high there, that's usually not negative, so sort of more constructive here. So if you see a couple of weeks of that, that's the sort of stuff you want to look for as a trader there. You see that tight consolidation under a high, that's normally constructive here. So although things will be taking a bit longer than ever I'd like here, still pretty constructive overall.
All right, well, we can now move to the Australian market, the XJO top 200 stocks on the Aussie market capitalisation. If we're having a look at that movement, we can see a similar thing, sort of some tight ranges, a bit like you said on the S&P 500. But we've come from this low and we came out of it quickly with two large candles and shot up. Now, remembering back to other reports of yours, is this a situation where we might be just looking at the counting, 2 days up, 4 days across?
Yeah, a bit like that. Yeah, it's definitely a little bit of that there. Just, the thing that I'm really impressed with, Chris, is that we've seen BHP, Rio, Fortescue all go to new lows here in the last week here. So I think, we've been sort of warning people for a while here that the normal sort of commodity cycle would sort of draw them down. They usually sort of find the low last in the cycle. So to me, I found that a little bit difficult there. I know it's a bit of an inflationary environment, which is often good for commodities, but the normal cycle will have them, having their bearish phase sort of last. So for me, I just want to stay out of there. If those things get sold off a bit more aggressively, and I might look at those, but they're sort of got lower highs there. We've got signs of distribution. We've definitely, on those sort of stocks there, we are seeing heavier volume on the downs and lighter volume on the up there. So it's still got that sort of distribution type characteristics sort of going on there. So I'd avoid some of those big resources there for the time being. But the impressive thing is, the index has held up pretty well considering those three stocks, which are fairly heavyweight on the index. Our market's held up pretty well. So that's a good sign. That means sort of other parts of the market are doing the lifting here. Other sectors are starting sort of holding up here. So it's good for our index if it can hold here while some of the heavyweights come under a bit of selling pressure, because then obviously they'll have a bit of a bounce or a cannon move, and then the index can kind of go here. So, I just view that it's pretty constructive to me, the price action, just struggling to go down here. Looking sort of corrective in nature. So, that's kind of positive for me.
Well, following that constructive price action and looking beyond the market itself into the sectors and indices to find parts that you're favouring, obviously not the miners, and you have mentioned that you're favouring growth. We scroll through your report and we do start off with growth. Now, for those that are watching this, the report was written on the weekend. You send it out to your clients on a Monday, so the candle does look like how it does in the report, but as we've seen earnings come out today, they've shot up again, haven't they?
They have, yeah. So look, for me personally, as a bit of a trader, I never really like holding a big position into earnings because it sort of can be a bit of a lottery. I mean, it's definitely been so maybe in a more bullish environment, you probably might have held a bigger position, but because it's so volatile at the moment, and even some sort of good reports have been taken poorly and some bad ones have been well, so it's just quite erratic. So to me, I actually sort of trimmed some of this position before the report, just obviously in the strength yesterday. I've only sort of kept a sort of smaller position. It has popped today, so look, it looks very good. It looks very positive. It's a big consolidation, a nice turn up there, some good healthy volume there. It's just the current environment was just sort of telling me just be a little cautious there, just because we're sort of this market hasn't really opened the shoulders here yet, Chris, unfortunately. So it's been sort of a bit of a 2 steps forward, 1 step back type of market here. So I was hoping maybe might ease back and then I'll add to it, but maybe it'll gap up here, which it has done, and maybe it'll consolidate back, then we can add to it again. So I think it's just that type of environment there where you just can't go sort of two guns blazing here. The main thing there is just if you buy those things at the right time when they're nice and tight, consolidating, you have a low, your stop's nice and tight, and then you've got the upside. So you've got a good risk reward there. So a couple other stocks I'm looking at the moment that have sort of got similar high risk rewards, which are sort of am getting attracted to it. But I just think it's a sort of environment here at the moment. If you have a big move like that, you should be taking it a little bit off, I think. Yeah.
Well, what we do move to is Credit Corp, which is another one on your list. Now, CCP, before we jump into the chart, do you just want to talk about what the company does and why it's sort of catching a bit of attention right now in this part of the economic cycle?
Yeah, I mean, obviously it's sort of, Credit Corp sort of obviously, the debt collector sort of goes out and buys, get books and then obviously collect those debts and then things like so. If you think about the current environment, there's been so much free money in the system here for years that it's been literally sort of very few bankruptcies and poor debts just because the sort of central banks have been handing out free money to individuals and to companies and things like that. So the debt markets have been pretty tough here. So it's been a really tough environment for them over the last few years. But now that sort of money is sort of stopped here, we are sort of starting to see an increase in bad debts and bankruptcies as well. So we're definitely seeing to look, last sort of 6 to 12 months, definitely seeing a few companies, getting into a bit of trouble here, which normally, I know it's not great, Chris, but that's the normal environment. Is we always see bankruptcies every year. We just always see a small amount of them. I think that the current environment has masked that issue for quite a few years, and the businesses that are struggling have been able to survive on handouts. So now those bad businesses that are struggling not getting handouts, there are going to be some bad debts here. So I just think this is seen some commentary from Credit Corp saying I think the cycle's changed. A couple of other bigger players in the US have sort of also made the same sort of commentary in their reports. Sort of think the debt markets credit cycle is shifting as well. So see better times ahead here. So market always looks ahead. So I think sort of fundamentally it's a good reasons why the stock is good value here. There's not too many companies as well in the space here. Like a lot of the smaller ones have been forced down. I think there's only like 3 sort of listed companies in this debt markets now. So not too many around here. Credit Corp has always been viewed as the leader, been some of the best practices there. So yeah, this is the one to sort of watch here. So I quite like it here, just because we've had that little false break, wash out, had a bit of a bounce, had another little pullback, had another bounce, sort of come back to this sort of zone here. So again, this is the risk reward thing that I like to sort of see if we're sort of buying it pretty close to the last sort of low, or buying it sort of just above the first sort of higher low here, using that as a stop here. So usually when you're sort of building it, shouldn't see sort of swing lows get broken here. So I think there's a couple of, think around that sort of, I think it might have been 1639 was the first higher low, and we've just pulled back down to sort of 1653 here. So, I think if you sort of just sort of stop, maybe just, you could probably have some of it sitting under 16. I'd have some of it a little tighter than that, maybe 1630, something like that. But good risk reward here. If we get a nice move back up to, say 21 or maybe even up to $24 there, we're sort of not risking too much to make a lot here. And that's the sort of trades that we want to be making here in this environment here. So I do like that. So I think it looks pretty interesting here. Might be a tad early. Maybe it'll flash back again. But yeah, I like these sort of low risk sort of high reward sort of trades here. So that's when you're getting 8 or 9 to 1 risk reward, then you don't need to get too many right for them to pay for all the bad trades you make. So yeah, that's the way I look at it.
Well, one that you also wanted to watch was Elders coming into this, looking at the agricultural side of things, and a few other. You mentioned Grain Corp in a previous podcast where we looked at it. Now, Elders, it was on your one to watch list, and since writing your report, it has dropped out. So what comes to mind is when you say stocks to watch. I remember one that you were watching at the time was when oil prices went negative, and trading that. And I remember adding to your watch list, and I did quite well out of that because you'd brought it to my attention and watched it, waited for a washout low. Could we see a washout low with Elders, or is that sort of setup possibly changed? Is there a new marker? What would you want to see from here?
Yeah, for me personally, I was looking at some of the ranges there, so I noticed the fibs weren't really, there was no resolution for this stock at all. So when I looked at the GAN ranges, I definitely saw a bit more resolution there. So I thought, okay, this 3/4 is definitely a level to watch. There was a bit of volume last week, and we saw GrainCorp, as you mentioned, have a bit of a pop here. So I thought, okay, maybe we need to keep an eye on elders there. If you can hold this level here in the next sort of week or two, maybe build, this is sort of something to watch there. But as you say, reported and has sold off there. It's actually gone through that level now. So that's sort of, for me, that's a bit of a void now. So I mean, I haven't done anything here. I've just for me, it's a bit of an alert to watch this one. But the fact that it's broken through now means it's probably going to come back a bit deeper. The bad result too will probably just keep the stock at bay for a while. So it's going to have to build here, Chris, as well. So, you know, this whole thing of, sometimes, we can see a bit of value there buying some of these sort of washouts there, but you ideally want to sort of see it building first and then heading up here. There's a reason why we follow the leaders there. The sort of strongs that looking the strongest, they're the ones that sort of continue to sort of keep kicking on. The ones that are sort of making new lows here and trending down here, you really got to have a good basis for buying them here. And at this stage, this is looking pretty negative here. So this is probably going to be under a bit more pressure, and then it's going to have to build a base. So to me, it's this, might come back to elders in a few months and revisit it, but it's it's going to have to build here, for a while here. But yeah.
So we'll pass on elders and we'll move over to Dicker Data. Now, both Dicker Data, SEK, as well as Life360 and Credit Corp are companies you've been watching for a while. Obviously, 360 you've taken profits on. Dicker Data, would love to see this in the chart in your report, the false break, the FB. Some people call them springs or watch them in a very similar way. This is a nice positive candle. How's this chart formation looking to you now?
Yeah, it's interesting. Obviously, Dicker Data sort of was one of the leaders in the past there, and obviously this year in that sort of growth phase, it hasn't, so that was sort of interesting there for me, is that I was expecting this one to sort of break up here, and it was sort of heading down. But the last thing on the chart which I did sort of see was that it did go to a slight new low, and then had that little bit of an exhaustive on the daily. There was a little bit of volume on that day, and then the next day it was back above the previous low. So it didn't sort of, when it went to a new low, it didn't follow through. It reversed there. There was a really good exhaustive sort of candle, good volume came in that day. And the next day it went up, and then it's continued to go up sort of since then. So that is a good sign here. The bad sign is that it's not, being a laggard tells us maybe this is not going to lead. But again, sister companies, they're sort of second or third tier. You still get sort of moves here, but I just don't view this as sort of having a leadership quality, because this has probably been, of all the growth stocks here, it's probably bounced the last. Or we're not, apart from the smalls there, I think there's a few, big caps move first, and mid caps, already starting to move. And then the smalls eventually will probably, catch up at some point here. So this was a pretty large cap here, and it's probably moved last out of that. It's probably started to move in line with them, with the mid caps moving here. So positive, but this is one that'll be probably more tempered on the upside there. Look, maybe it can go back to $11 from that. But yeah, it's probably not my number one pick in there, but it still looks pretty constructive.
Nice. Well, moving to some other companies that can be in that growth space, but more exciting for SEK is that just this kind of formation. There's a pullback, there's a rally to a lower high, there's a pullback to a higher low, there's a bit of a rally, and then could we be creating a VCP in here, Gareth?
Yeah, so the main thing there is it's been sort of rounding up for a while here now. So it's sort of, had a bit of a run, pulled back, made a high low, we've had a bit of strong run, the upward momentum there is pretty quick. So that's sort of impulsive in nature. And then the pullbacks are sort of more corrective. They're more sideways sort of orientated. So that's positive as well. So, and then now we're sort of starting to see each sort of pullback is getting shallower and shallower. So, and sort of building process there. So that's kind of equivalent to the market in some some ways. There's a sort of SEK is sort of matching the market here, really. So, I think I view this as pretty constructive overall. And if you look through the volume there too, Chris, as well, I haven't seen too much volume come in on the downs there. There's sort of been, not too much there, and it's sort of probably more constructive on the rallies as well. So, I think there was some really, really light volume sort of on the way down here. And a few more up, sort of definitely sort of stronger bars on the way up here. So it takes a while to build sometimes. You obviously want to sort of see this, go faster here, but overall, like a lot of the markets, it's pretty constructive to me. I'm not sort of seeing any aggressive selling on the down days. They're seeing more of a sideways on the pullbacks, and the lows getting shallower and shallower. So it's just, those are sort of constructive signs. Just is a little bit of, sort of groundhog day sort of coming in each day, sort of not seeing big moves, but you are seeing sort of constructive price behavior, and that's the key there, sort of longer term.
Another one on the chart is Megaport MP1. Now, this one has definitely fallen significantly. Looking at the chart straight away, 22 highs back in late 2021. This is a weekly chart on the screen, coming down towards this $4 region. What's happening here, Gary?
Yeah, I just like there's two things there. I like the fact that we made a false break, sort of washed out, went to a new low. We saw big volume around that low as well. There's definitely heightened activity around that, so sort of signs of accumulation. And then coming out of that low, we saw some good news, a bit of a fundamental upgrade, you might say, from the company. And the stocks had a pretty sharp jump on the back of that, which is probably a little bit of a surprise that they've sort of turned it around so quickly. And then the last couple of weeks here, we've seen just tight price behavior. So it's sort of pulled back here, but not giving up much. So gone up impulsively, pulled back in a corrective manner here. So it's sort of, probably change the character a little bit there as well. Some good volume there. So I think, this is sort of constructive there. I like to see the market goes up hard and impulsively, and then it starts down. When it goes down in a sort of sideways or a corrective manner. I view that as being sort of constructive there. So, this looks pretty constructive to me. We're starting to see growth get going here as well. So, so I think it looks pretty good here.
On that growth side of things, we look in the market, we'll see Appen. Now, you've got the daily chart here. As the 50-day moving average suggests, Appen was at a much higher price coming into the chart on the left-hand side. But we've got it sort of sitting along the bottom here, sort of bouncing along, goes to a rally, comes back, a retest, this solid red line, rallies again, VCP you've got highlighted in here, gets back over, market update, heavy volume, hit hard. What's happening right here, Gary?
I think the two so they've had two updates here, and they've both sold off really aggressively after the updates there. So I didn't think there was too much more new in the second one, but it has sort of come off quite a bit here. The interesting sort of thing is it's sort of gone to the low, had a bit of a bounce, gone back and retest the low, had another strong bounce. And it's come back again at sort of third attempt of the low here and gone to a new low. So basically sort of, and then sort of trying to bounce here. So a bit of a false break here. So those are things that I sort of do like to watch. They're a bit exhaustive on the volume sort of side here as well. But I see that out last night, they're actually doing a capital raise there. It's not particularly large there. I think it's sort of only sort of about 20 mil institutional. I think about 40 mil, like a 1 for 6. So all shareholders will be getting one more share for every 6 held at a discount. So I think it'll water down a little bit. But oftentimes the funny thing is those sort of those cap risings sort of when they normally occur, they normally occur pretty close to the low. So it's probably going to bring the share price back a little bit here. So it might sort of maybe quash this little false break here. But I thought if we sort of stayed, if we sort of close above sort of 225 there, that's for me a bit of a constructive sign. But it's probably going to be messy here for the next couple of weeks while, there'll be a little bit of
the wash from those shares allocated, people's profits.
Yeah,
selling pressure.
That's right. So the instas are getting in at 185. Well, probably some of those guys will wash that out, make the short gains there. Institutional sort of stuff will probably get done here because obviously it's quite a fair bit lower, I think 185, so you'll be encouraged to take it up. So I think it's 222 is the adjusted price there after the close there. So it's just a little bit dilutionary, not too much. But yeah, so it'll be a bit messy for a week or two here, but history says normally these things get done pretty close to lows here. So yeah, just be one to watch here the next couple of weeks. But yeah, I wouldn't be jumping in straight away here. I'd probably be watching for another week or two. But yeah, history sort of says this is the point where these things sort of normally recover.
Oh, there's some amazing studies on that. I'm sure you do remember actually the GFC, where there was all the money being raised and the banks, Brambles, a lot of the top 20 were raising funds, and not long after the market just turned and rallied and kept going. Rio as well.
Yeah, I remember sort of where the steel prices, so One Steel and Blue Scope Steel and all those sort of companies sort of raised money as well. And that was sort of where things were at their perceived worst there, and that was end up being just a cracking time. They had massive moves after that. So it's funny that I would hazard to guess obviously some people in the market probably knew this was coming, Chris. And that's probably a large reason as to why it's sort of trading down so low. So yeah, but in that now everything's out there. It's the funny thing. It's sort of what all the bad news is out there. That's why I didn't think there was a big change in that last update. I didn't think there was sort of much new in there. But obviously someone knew that a raising was coming, so that's why it got sold off pretty aggressively. But yeah.
Well, they're good insights to put the fundamental, what's happening on the corporate side, up with the charts to understand how that lays out, and can actually sort of draw a chart depending on what's happening inside and outside of the company. So that's a good wrap for the week, a good report. And to that end, we'll say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
Gary's mentioned some of the stocks that he's been looking at and monitoring, and the leaders. That's where we cover them in the 30-30 list on Friday. That playlist is on the right-hand side. And then there's strategies like false breaks, springs, volatility contraction patterns, as well as the presidential cycles that Gary talked about right at the start, where he's talking about how the indices are impacted by that 4-year presidential cycle. That's also in the playlist. And then the left-hand side, that's where you can catch Gary on Twitter to see his updates and connect with Gary there.